Hello students, welcome to the series on marketing and retail management. Today we are going to study retail management. In this we will cover unit 2. The topic is transactions through smart cards and e-payments. Now let's study the objective of this lecture. The basic objective of this lecture is to do an analysis of the concept of shopping through smart cards and to study the impact of e-payments on business. Now let's see what are e-payments. E-payments are made electronically over internet. This is a system where financial exchange takes place between buyers and sellers. Payments are done through credit cards and electronic cash. Now let's see what are e-payments. This is a buzzword in the market. The demonetization has forced people to enter the market in a new way. Though e-payments have existed in markets for last 2 decades, but familiarization of customers, that is especially the Indian customers, is happening in a big way through this new era. The e-payments have become a way of survival when you want to buy goods through the websites. Though we have the cash on delivery option, but it is a costly option. So, most of the big retailers do connect to the customers only through the electronic payments. Electronic payments are done over internet, that is the transaction is made between the buyer and the seller through electronic cash or through a credit card. Now let us see what is e-cash and e-wallet. E-cash and e-wallet is basically a part of a concept which is shared between the customer and the buyer who do virtual businesses, that is the customer is connected through virtual business. If you want to buy something through websites, you need e-cash. Let us see the payment cards. We have credit cards, we have debit cards, we have charge cards and we have smart cards. What are credit cards? Credit cards are issued by credit companies like MasterCard and Visa and major banks like State Bank of India and HDFC, etc. So, credit card is basically issued by the banks to which you are connected and you have a bank balance in that bank or you have a bank account. Then the companies, that is the banking companies, would give you MasterCards and Visa cards. Debit cards is a plastic card with a unique number. It requires a bank account and no interest charges are related to this card. That is, debit card is basically a card which is carried by you if you have a bank account number and you have some amount of money in that particular account. So, till the level of cash which you have in that account, you would be able to use this debit card. Then is the charge cards. They are similar to credit cards except that they have no revolving credit line. So, they have to make payments every month, that is charge cards is you do a kind of a prepaid charge or you do a post paid charge. Every month you have to clear the settlement and carry these cards. Then you have smart cards. It is similar to credit card and debit card in appearance, but it has a small microprocessor chip embedded in it. So, the most advanced card which you can use in the market is the smart card, which is more advanced than the debit and the credit cards available, because it is more technologically safe in terms of connecting to the business houses. Then is the electronic cash. In case of e-cash, both customer and merchant have to sign up with the bank or company issuing e-cash. It enables transactions between customers without the need of the banks. Now, e-cash is which you acquire from banks through your mobiles or through your electronic gadgets, that is if you have a laptop or other any gadget by which you can connect to the bank, and from your account some amount is transferred to your software, that is you may have a Paytm or you have other wallet, and this amount you can generally use it for shopping, that is you can do any kind of transactions in the market where you can share a phone number or you can share a bank account number. It depends how you can connect to the buyer or you can connect to the seller. E-wallets. E-wallet is a card with a microchip. It replaces the cash and coins to buy and pay for road and bridge or tolls or phone bills extra. It is convenient and safe. So, e-wallet is now a modern kind of a card which is having a microchip, and this microchip is carrying the electronic cash, and when you swap this wallet, you generally can pay your bills when you are going through transport, that is you have to pay toll charges or you have to pay for other options where you can swap a card, you can use your e-wallets which give you a kind of a survival in the market with more convenience and safety. How to access e-wallets? You have a user registration, see a proposal, accept the kind of the proposal, release the funds, then you have to post the kind of the registration number, put money into the e-wallet and approve the payment request. So, basically when you use a e-wallet, you basically have to register yourself with the company who will issue you the card for e-wallet. Then when you post your requirement or you post your proposals, the company will respond to you and it will generally decide your power, how much cash you can carry according to the availability of your income in the account, and you will have the transfer of money to your account, and when your basic request is approved, you can use this card anywhere. Then you have micro payment systems, small payments on website like by billing, by bank, financial institutes, etc. You have universal acceptance, you have a comprehensive security and allows vendors to sell content and information. Through your bank accounts also you can connect to many services where you want to generally take information from website which is very abstract, that is you can download books from Kindle or you can have access to information or to have access to some kind of videos or some kind of CDs or some kind of documentary or movies. You can pay through this micro payment systems on websites through your bank accounts and access that information or download that information. Then you have peer to peer payments, which is the online financial transfer through the email addresses. It reduces the risk of fraud and overdrawn. It is example is PayPal services. Peer to peer is when two business people do connect. So, they have a registered account and they can directly connect, they can transfer the cash and settle their payments through the email services. So, this is basically a registering authority has to be there which will take the kind of the responsibility that both the authorities who are signing a contract do have a kind of a consistent capability of paying and have a kind of a cash in their account. So, PayPal is basically offering these services to most of the e-commerce sites globally and in India also. E-PayPal system, it enables individuals to withdraw cash from their PayPal accounts, allows customers to send their transaction money quickly and safely to anyone. It is to use it, one should understand and get registered to themselves on the websites. When you want to use this PayPal services, you have to go to the PayPal site, register yourself, then you can generally connect to the buyer who himself also has to be registered. So, both the parties when are registered can have a kind of a peer to peer transaction by a trusted mediator, which is a big company globally settling the accounts for companies like eBay and other e-commerce sites in the markets. Then you have eCash. Online payments via debit cards, credit cards and smart cards, they are the examples of e-money transaction. eCash is transferred directly from customer's desktop to the merchant's site. Now, eCash can be collected from any bank to your account, which is a kind of a basic number on websites or on your apps or on your mobiles, and through these gadgets you can transfer to any person who himself is registered and has a kind of a app or a number or a website, and we can transfer this. Without registration and numbers, nothing is possible in this e-payment system. Then you have e-checks. E-check is the result of the cooperation between several banks, government entities, technology companies and e-commerce organizations. These can be used for small and large organization. Now, e-checks have also emerged, but then because we are transferring to the customers and to the buyers where the anonymity is high. So, this is less popular, but then it is popular with the big organizations who have formed cartels and who have a kind of various authorities linking them, that is we have government entities, technologically advanced companies and e-commerce organizations which operate at a very large scale, have a kind of a e-check facility also, by which they only enter the amount and can mail this or scan this document to the other companies, and this fund transfer also happens to the e-checks. Now, let us see what is the electronic fund transfer. It is one of the oldest methods to transfer money. It basically is a simplified accounting to improve efficiency. It reduces administrative cost and it improves the security. Now, when we talk about the electronic fund transfer, if it is secured, then obviously this is the most safest and the convenient way to settle your accounts, because this procedure would involve less time and less administrative costs. So, it is cheaper as compared to the physical transactions which are happening through the bank. The security issues basically impact the electronic transfers, where the confidential services are important, the integrity of the business house is important, the availability of registration is important, the auditability of account should be possible, the encryption is important, the authenticity is important, and non-rejection by the buyers and sellers is important. It is important that when we are operating in the market, our codes, that is the PIN and the numbers of the cards, should be kept confidential by the people to whom we are transferring our accounts. So, when the companies do own the data, they can misuse the data. So, we need to have trusted banking authorities and even the merchants who are buying our services. So, if the bank is trusted and is generally authorized, and if the merchant is also registered and is authorized, then only this kind of transaction can happen, because if the website is anonymous and if our account details are sold to the outside companies, then the details can be hacked and it will cause a kind of harm to our bank accounts. So, generally people try to do electronic transactions only when they know which is the website which is available in the market, what is the reputation and what is the integrity of the business houses. Then only we are giving our details, like we have railway sites which are very popular and authentic in terms, that is we know that they are owned by government. So, our details will not be given to the other sites, and even we have big companies like private entrepreneurs who are in the market, who have a reputation of working in the industry for many decades. So, after 3-4 decades, these companies have earned the trust of the customers and they have earned a reputation of not disclosing the facts and informations about the customer's financial capabilities. So, now this electronic transfer is happening in an easy way. Then we have digital signatures. Digital signature is an electronic signature. In e-check technology, we allow the digital signature to be applied to a document block rather than to the entire document. Digital signatures are the electronic signatures which we generally try to now do it on the e-checks, that is a particular segment of the document is selected, and when we try to have this kind of a signature on the electronic document, then this document is accepted by the other authority. Then we have certificates. A certificate provides a mechanism for establishing confidence in the relationship between a public key and the entity that owns the corresponding private key controlled by the government. Now, we need to show our certificates also when we do businesses with people, because when transactions are of less amount, people do not demand too much of certification and authentication. But when larger amount of money is demanded, like if we want to send 40-50 lakhs to a foreign university for education, then it is not easy for customers to do this transfer. So, the university needs to produce a certificate that it is the authentic university, and a bank signing the certificate that this is a physical entity available in other continents or other parts of the global area, and then only the students from all over the world can do the fund transfer, which is done within seconds and which is done with great ease based on the trust and the popularity and the certificates displayed by those universities. Certificate authorities. Certificate authorities are similar to notary public, a commodity third party transfer. In e-commerce world, certificate authorities are corresponding of passport offices in government. They validate digital signature and hold holders identity and authority. Now, who are certificate authorities? Certificate authorities basically are the third party, that is the buyer and seller, they themselves cannot be certificate authorities. They have to give this authority either to the passport officers or to the government or to the government owned banks, who would give the proof of their identity of physical existence and the proof of their trusted transactions over a period of time. Then only the people will believe. Then we have mobile phone based payments. Deep penetration of mobile phone across social and economic status have made these payments very popular. They are recognized as feasible model for financial inclusion owing to coverage and low cost. India has adopted the bank led model. Regulations like KYC have become important. Transaction amount limits the applicability. Now, websites have become important, but now the new way of doing transaction is through the mobile phones, where apps have become important. These apps do functions in the same way as what websites do, but apps are more fast in terms when you have downloaded app in your mobile, it would register your name and your KYC and everything is registered. This with this app you can connect to any buyer and seller and any bank in an easy way. Here you can download any software and try to connect with the customer or buyer or seller, go for customer to customer buying or business to customer buying or B2 buying. Everything is possible through the smartphones. These smartphones are the advanced versions with software supported facilities which have handled the banking operations which were earlier done by websites. Then we have prepaid cards. This is a channel to mobilize the financial inclusion of people. It can be used within the existing card network. It is to expand the other technologies like internet wallets and smart cards. Regulations of KYC do apply over here. Now, we have prepaid cards, like if you want to travel to a foreign country, then because it takes time to make your credit cards and your debit cards, and if you are not prone to use the card, it is very easy to make a prepaid card which takes only few hours to make a prepaid card. Like you take a forex card from a bank where you give some amount of money to the bank and they will issue your card within few hours. So, if you have given 1 lakh, you get a card of 1 lakh, but this limit is fixed and it cannot be extended, that is you cannot do a large amount of shopping, and this card is basically popular with travelers and with people who want to go out and who do not want to give the details of smart cards and they do not want to give the details of credit cards. So, they take a prepaid card which has a life of 3 months, that is the validity of 3 months, and it is used with certain sectors of shopping and it is a easy way, that is we try to include larger population of people who are not in the banking system to do shopping through the cards. We issue these prepaid cards so that people can connect in a safe, in a easy way, and they have a practice and a maturity to understand how electronic transactions take place. E-commerce and security. The e-commerce security basically depends on the authorization and access control, that is protect internet from hoarders and firewalls. Confidentiality is the data integrity, that is protect contents against snoopers and encryption. Authentication is both the parties need to prove their identity before starting a transaction, that is the digital certificates. Non-repudiation is the proof that the document originated by you and you only, that is digital signature. E-commerce security definitely involves high level of security and high level of technological professionals to support the softwares which need a kind of a system where both the parties have to give their identity through certificates, and they need to connect to the system in such a way that the confidentiality of data becomes important. That is, our pins and our uh, passwords need to be secured in such a way that the third party should not know about it. That is, the even the banks do banks do transfer the passwords where they themselves do not know. So, they try to give you a secured kind of a generation of password which is within the customer's transaction details. So, this confidentiality needs to be secured. We need a high amount of security in terms of deciding that is this transaction which is taking place is safe, and where even after transactions for years to come our data will be not sold to the other parties. Electronic payment issues which impact the market is the secure transfer across internet. It is high reliability. No single failure point has to be there. The atomic transaction, that is the smallest transactions, can take place. It is anonymity of the buyer. The economic and computational efficiency to allow micropayments, the flexibility across different methods. It is scalability in number of servers and users. Now, when we talk about the issues, the basic issues is security, the confidentiality, the anonymity and the flexibility, that is how do we scale up the operations. What is scaling up? That is, there are more services and segments needed to be connected. The electronic payments in this modern era are only popular with railways, with service sectors like insurance, with ticketing, with entertainment industry. But when you talk about like buying jewelry or buying gold or real estate, it is still not happening by electronic payments. So, we need to still modify and make these payments foolproof, so that even higher and big payments do take place through the websites. Now, let us study the cyber cash. The customer opens account with cyber cash, gives a credit card number and gets a PIN. Special software on customer side sends the PIN, signature, transaction amount to the merchant. The merchant forwards the cyber cash server that completes credit card transaction. Credit card is not shown to the server. There is micro transactions are not happening through credit cards. Now, when we talk about cyber cash, it is only possible, that is, I can't make cash payments for coins, or I cannot make payments of very small amount through credit cards. So, when we give our signatures and our pins to the merchant basically refers this details to the server, and the server basically protects the security and tries to complete the transaction through a banking authority. Working of e-check. The check writer writes the e-check using one of the many types of electronic devices, gives e-check to the paying electronically, payee deposits e-check, receives the credit, payee bank clears the e-check to the paying bank validates the e-check and charges the check's writer account for the check. So, here both the authorities, when enter into a transaction, obviously you have to validate, and then only your cash from your account can be transferred to the other person's account. Now, let us study the summary of this lecture. In this lecture, we have studied the electronic payments, that is the e-payments through smart cards and other forms of cyber cash. Electronic payments has become important in India after demonetization, and if we want to systemize the economy, that is, we want to contribute more to the GDP, it is important for people to understand the mechanism, because it is safe, it is secured, and it allows more convenience to the customers. Though this system has some challenges, but with the development of time and with modern technologies, these issues will be overcome, and people need to resort onto these techniques to enhance the professionalism in business and in society. I hope the students must have understood the procedure of electronic transactions through smart cards and e-payments. Thank you, students.